You are listening to Assets Unscripted. My name is Berend Booms and I am your host. And joining me on this episode is Matthew Weiss, who is the VP and Head of Strategy and Business Development at ABB Electrification Service. Matt, thank you so much for being here. Let me tell you, I have been looking forward to this conversation, not just this week, but for many weeks now, right? It has proven to be a challenge to schedule this session between our busy calendars, but we managed, and I'm so excited to get to talk to you about electrification and the shift that ABB is seeing towards more assured asset performance, let's call it that. Now, could you, to help us get to know you, tell us a little bit about who you are, what do you do for fun, about your role at ABB, and also what it is that ABB offers their customers?
Yeah, no, great. Thanks so much, Berend. I've also been looking forward to having the chance to chat with you about these topics, and thanks also for having me along to the podcast. And you know what? Like, I have to start by saying I'm not sure where you or the listeners or viewers are today, but it is absolutely beautiful here in Zurich, in Switzerland.
It is.
Where I'm personally based. So as much fun as it is to have this chat on Friday afternoon, I'm quite looking forward to the weekend, and on a personal note, spending some time outside doing sport and inside watching sport. There's lots of bike racing on and golf.
Absolutely.
Football, big Arsenal fan, Carabao Cup final this weekend. So that's the plan for the weekend and my personal passion. And you know, the moving on to ABB and the professional side. So yeah, look, so ABB, we're kind of a global leader in electrification and automation. For reference, the company's been around for like 140 years, and if you look on Wikipedia or ask ChatGPT, that it'll tell you that that's about the same amount of time since the light bulb was invented. So we've been doing electricity since electricity was a thing. Nowadays, we're like a global leader in this space. 100 billion plus market cap, companies mostly engineers and technology experts. And in a nutshell, we like to say that we help industries outrun leaner and cleaner with our leading technology. In other words, helping industries to do more with less and to do better with our technology embedded. And as a company full of engineers, they like to give me a hard time because I used to be a scientist academically, like I did chemistry up to PhD level, and then moved into strategy consulting. So I have no credibility when it comes to working with the engineers, at least in the beginning. But you know, before joining the company in consulting, I sort of moved into ABB to really take more of a hands-on role in charting the course to navigate and kind of define the direction of the energy transition, right? Because as you can imagine, as a leading technology and engineering player in this space, we're at the cutting edge of the energy transition and all the topics and technologies that are moving that space forward, which has huge impacts on global society. And you know, since I joined ABB 9 years ago or so, I've had various strategy roles, and now, as you say, head up strategy for our electrification service business. And in this small corner of ABB, we're about 1.5 billion in revenues now, just as a reference point. And we like to think of ourselves as the trusted service partner for ABB's customers, and helping them to achieve available, reliable, predictable, and sustainable electrical power in their operations. We have, give or take, 3,000 colleagues, over 1,000 service engineers globally, in 50-odd countries. We look after 18 million ABB assets out there in the world. And we kind of partner, as I say, with our customers to really ensure that they're able to get the most out of their electrical power systems, with services through the whole asset lifecycle, from installation and commissioning of new sites through to maintenance of their existing equipment, through to modernization of end-of-life equipment versus rip and replace, supporting them to embed things like digital capabilities around predictive analytics, around AI and remote monitoring and preventive maintenance, and increasingly going beyond the electrical power system scope and more into the energy scope to support them to navigate the energy transition. So we're really kind of at the focal point between the evolution of energy supply and the evolution of energy demand,
Right.
and supporting our customers to try and make sense of this transition and ensuring that their assets are able to manage the paradigm shift that's going on in the world at the moment.
And there's so many of those. And, the energy transition itself is such an interesting topic to me. And honestly, the way I got in touch with ABB and then with you was through one of the reports that I read about this. I believe it was the Powering Net Zero report. Came out last year or the year before. I don't really remember. But that was a really insightful piece where you have been in that business for so long, yet you're getting all of these great insights from various leaders in healthcare, in manufacturing, logistics, and beyond. And you're really looking at how some of these companies are now having to rethink what asset optimization actually means and what it helps realize, how to be responsible with how we generate and use that energy, and what performance actually looks like at scale. Right. And one of the takeaways for me from that report is how you at ABB are seeing a shift from these more traditional service models towards what is called assured outcomes. Right now, you mentioned that you have been around as long as the light bulb. Now, I don't want to go back quite as far, but I do wonder your opinion on some of the technological advancements that we have seen in more recent years. So let's say the last 3 to 5 years. What are some of those advancements that you've seen that you think are most significant in enabling organizations of that scale with those very, in very asset intensive industries to use more predictive approaches to get towards some of those more assured outcomes?
Yeah, I think it's a really interesting question because, if you're working in the space of electrical power distribution, if you're working with customers like power utilities as well as high intensity energy users, there's a lot of natural conservatism about how they think about their operations, their sites, their business models, create value, and so on. But equally, as a global society, the more technologically advanced we become, the faster we can innovate. So you have this, you have these two forces of nature kind of colliding now. And the speed at which technological innovation is happening, but also the speed at which the energy transition is happening, is forcing traditionally conservative industries to rethink the way that they approach their asset management. And I would say it's not necessarily like one specific technology, but there's kind of a convergence of a few factors, whether it's data, the speed and volumes of data generation and the tools we have to manage that, whether it's connectivity and our ability to now move from a dumb light bulb to a smart light bulb in that 140 years, let alone for a bigger piece of electrical equipment. And then, of course, like we all read about AI on a daily basis. There's another layer on top of that. But all these convergent technologies moving into this operational environment. And so what you're starting to see now increasingly is things like real-time monitoring gaining traction. So continuous visibility into asset health, system performance. You combine that with things like augmented reality, and quite quickly you're able to conceive of ways that you can change the paradigm of break fix or reactive service to preventive and augmented reality based service that enables self-support. Applying things like AI and machine learning models to energy and asset data to forecast usage, forecast performance, in some cases forecast failure risk and bring signals there to improve operations. And then also as we get more sophisticated in how we manage compute, back in the day it was on-site desktop PCs, then we went to the centralized cloud model, and now we're looking at these hybrid compute landscapes where you have on-device machine learning or AI models combined with the cloud that can allow you to do things like reduce latency when it comes to real-time operations or interacting with devices. And so you're seeing these technologies in a sort of combined way come into play. And what that's doing is enabling asset owners, operators to shift from individual asset optimization to system orchestration. It's allowing you to predict performance and optimize decisions on that system basis, and ultimately enabling you to to bridge the gap towards like business performance and business outcomes. So you can combine things like uptime, energy costs, emissions into one holistic framework. In the best cases, you can engineer that and you can manage that as a business driver and a business outcome. And that kind of shifts the mindset to the assets that we work with. But let's be honest, are often grey boxes that sit in the basement of a big building.
Right.
Passively, they don't even move, right? They just passively hum and carry current. But they're mission critical assets that can make or break a business. And so that system mindset, that appreciation of these electrical power distribution assets as mission critical strategic assets is kind of the shift that we've seen, enabled by technology, despite this entrenched conservatism in our case.
Yeah, and it starts out like that often. But one thing that you said is, the connectivity, the visibility, and I find that really interesting because what I'm also seeing in some of the other industries is that you will sometimes have these mission critical, business critical assets that are in very difficult to reach places. So to be on top of things, having these connected assets that are transmitting that information actively, having maybe something like a remote monitoring platform enables you to work towards that increased performance. Is that, when you look at the performance of some of those more difficult to manage, more difficult to reach assets, can you actually guarantee that performance? Or does it still have sort of a threshold level, a cap on what you can do in terms of getting that performance to where it needs to be?
Yeah, I think the technology now, it enables you to go even further, right? Like thinking back to the fever dream of COVID, right? 5-6 years ago now. We were even, because then assets, the whole notion of hard to access completely transformed, right? Because no longer is it something buried in deep underground or in behind multiple locked doors with yellow triangles on, but just something that was a flight away becomes a hard to access asset. And so we were very quickly forced to shift to things like augmented reality technology to enable us to commission critical infrastructure projects from Chicago that were being built in China. So the technology very much plays a role there across the asset lifecycle. But then thinking about the uptime and performance guarantees question, I think it's something that is beyond just being an element of addressing hard to access assets. I think it actually is more of a fundamental paradigm shift that's reimagining service models. Now that sounds very prosaic, right?
Yeah.
But if you think about the way in which traditional service level agreements or service contracts have been conceived of and designed, historically the way that you would think about them is you would say, well, hey, look, we as a service provider like ABB Electrification Service, we will commit to, and you, Mr. Customer, or asset operator, you will pay for a guaranteed response time. Right? It might be an hour, it might be 12 hours, depending on reality. By the way, that's also transformed with augmented reality. But, and then you'll also pay for certain maintenance scheduling, right? So we look at this thing every month versus 6 months versus 12 months, and it's if you think about it, that's a very sort of input-based and input-focused model, right? And there, when you think about these, to take this hard-to-reach example, we have assets that are literally literally buried underground in old listed buildings, right, which are a nightmare to get to in a big. But you thinking about maintenance, provision, and asset performance on that input basis, you're kind of missing the point, which is that what you're trying to do is you're trying to enable performance criteria like uptime or efficiency or life cycle, right? So should you not be within your service agreements, within your maintenance contracts, within your asset management strategy, should you not be thinking about those outputs as the key performance criteria, and those outputs as to what define your asset management models as opposed to the inputs? And there, the way that we're thinking about this is indeed that, provided you have the appropriate technology, like the physical or AI-based models, like the predictive algorithms to support performance, and you can look after these sorts of models, right? And the beauty of this is that, and we found this was validated in the report that we did around powering net zero. The beauty of this is that then you can enable financial decision makers to appropriately assess the business cases and the ROIs of assets in a different way. Because it's quite difficult to say, okay, if I move from looking at the asset every 6 weeks to every 12 weeks, what's the difference going to be in terms of likelihood of failure or in terms of efficiency of the asset performance, especially for something that might last for 20 years, right? It's a drop in the ocean. But if you can actually say, hey, what's the difference in financial impact and total cost of ownership, and also downside risk mitigation, if I get 99% performance versus 95% performance, right? This you can monetize. If you're looking at a data center or a pharmaceutical plant, right, you lose a batch or you lose a server rack. Like, this has a tangible economic impact. And so that mindset shift of, hey, look, rather than thinking about the inputs like maintenance and response times, I look at the outputs like uptime and efficiency. Then I can put a dollar number on it. Then I can appropriately value those interventions and their impact. Then I can make more informed financial decisions about how to optimize my asset. And we see it, for us, a really good example of that is around the battery projects that we're looking at, where you can basically say, hey, the more uptime I have in a battery that I put on an industrial site that can, trade energy and that can provide ancillary grid services, 99% uptime versus 95% uptime ensures I can do this many more trades, right? And through battery health algorithms and monitoring, as well as the broader electrical power system performance guarantees, we can come up with financial models that can bring a really strong return on investment message for the asset owner and operator, allowing them to make the right decisions for their resilience, but also financial.
Yeah, and that's it. I mean, knowledge is power in this case, where you can start to make those very impactful decisions to the benefit of the asset life cycle, but also to the bottom line. And I really liked how you framed this in the beginning. I think you said that it's about the optimization that you do at system level and not so much the management of the individual asset, right? Or at the asset level. So when it comes to some of these organizations that have a more complex asset ecosystem, let's call it that, what are they often doing or misunderstanding rather when they set about to optimize how they manage their assets?
Yeah, it's a good question, and this is one of the things that we dug into in the report. And so I think once you take that first step to thinking about the system level, we often find that organizations encounter other challenges. And interestingly, it was on the organizational level, on the technology level. So a few that we identified. Organizations can often approach these optimization challenges in silos.
Right.
Whether it's the maintenance team might be laser focused on asset uptime. The energy procurement team might be laser focused on energy cost. The sustainability team might be laser focused on electrical power losses or carbon content of electricity. And these may not be aligned to a single, if you like, performance framework, right? Where you're balancing criteria, or rather than balancing, you're also identifying ways in which you can both be greener and reduce cost. And batteries, by the way, are great at doing that as well. But that those organizational barriers and organizational silos we found could be a sticking point in running with that asset system optimization concept. And another area that we saw was thinking about optimization as a sort of like static or one-off initiative, right? We've identified some opportunities, we pull the trigger on some projects, and then we move on to the next thing, as opposed to like a continuous process of improvement and addressing changing operating conditions and environments and demand patterns, right? I mean, we live in volatile times, right? You just have to look
Absolutely.
at the conflict that's been unfolding in the Middle East in the last couple of weeks. If your models are based off a certain barrel of oil price or a certain term of natural gas price, then sorry, my camera's being again. Then your calculations may need to be completely rerun and your optimization algorithms reconsidered when you're confronted with a changing environment like that and your cost drivers alter. And so a continuous approach to optimization, once you've established those broken down those organizational silos or come up with this idea of like a cross-functional performance framework. And then the other area that we found was that I mentioned before the idea of being more output oriented as opposed to input oriented and thinking about total cost of ownership. We also found that that there can be a mindset in some cases more towards thinking about the upfront cost and capital cost of solutions as opposed to thinking through the TCO. And how organizations can often underestimate things like using predictive maintenance models to lower the frequency of maintenance when they're thinking about maintenance costs. So we found that in our own research that predictive maintenance can lower maintenance costs by 30%. So if you can flow that through your financial models, take a total cost of ownership mindset as opposed to laser focusing on the cost of capital and CapEx, then again you start to unlock optimization opportunities on the cost side. So I think those are the areas really that we identified.
And you're also starting to break down those silos. And what you just said there was really interesting to me, where you're talking about CapEx, you also talk about OpEx in the report itself. And you had also mentioned sort of volatility, uncertainty that we're seeing on a global socioeconomic scale right now. I think that's a really important factor. It definitely plays into how we navigate our operations, but it also plays a role in navigating uncertainty, right, over the sort of extended life cycle of some of these assets. And speaking to other leaders, this comes up again, right, in asset intensive industries with assets that have life cycles beyond my current age, let's say, right? It is definitely a top of mind, something that you need to pay attention to. Now, when you also mentioned that ABB is sort of shifting the way that service and SLAs are approached, if you look at some of the more traditional service contracts or some of the long-term SLAs, where do you think they fall short when it comes to sustaining asset health, not just for the foreseeable future, but for larger periods of time?
Yeah, no, I think that's it's an interesting question, and there again, I think that the way that we think about it is this whole from input based to output based, from upfront CapEx based to life cycle based, and the way that we sort of capture that, it's been around for a while, but I think we're starting to see more traction around this term of as a service. And what for us that means is you are able to empower yourself with tools to assess in a sufficiently sophisticated way that you can bank financially total lifetime cost of these assets, plus the tools that you need to ensure performance guarantees, plus the partnerships that you need to do things like remove residual risk through tailored insurance contracts, like in performance guarantees, warranty extensions. You're generating revenue, then merchant risk management. And so I think that the combination of those factors that fundamentally shift you away from, even in the SLA basis, like that break fix mindset, and more into a fully holistic, lifetime perspective, service level agreement being an enabler for a set of outcomes that you can link to a business case covering both CapEx and OpEx. This is the mindset shift and the paradigm shift, and it works really well today for some assets. I mean, it's not new, right? In the industrial goods space. I mean, the power by the hour work that GE did on aircraft engines is the business school case study. But now we see it in batteries, and increasingly are looking to expand it to other assets in the electrification space as well. And like the holy grail here for us in ABB, you know, if you allow me to wax lyrical, is like, could you provide an electrical power system as a service? Because, you know, if you're whether you're a data center or whether you're a food and beverage producer or a pharmaceutical producer, ultimately what you're trying to solve for is the number of biscuits that come off your production line, or the quality of the drug precursors. And electrical power is an enabler to that end. And so now the mindset is it's extremely strategic, and we've got to ensure uptime to deliver our outcomes. But if you can work with partners that can provide those performance guarantees to a level of sophistication with a bankable financial model, then as a business you can focus on what's important to you, right? Right. Wouldn't it be great if the camera provider for this Zoom call was able to provide 100% performance guarantees? My picture wasn't dropping every now and again. Right. But I think that's probably how I think about that point.
Yeah, and it's through this partnership that you stand to gain and you rise up, standing on the shoulders of giants. I think that's a really interesting take. I'd like to move the conversation over to a topic that you had already briefly mentioned. Yep. It is everyone's favorite topic. It is everything that we seem to talk about these days, and it is, of course, artificial intelligence. Yeah. Now, in the report, what you guys do is you highlight both sort of promise and the potential of AI, but also the pitfalls, right? And it's this idea that AI can definitely deliver a lot of value, but only if it is grounded in good, clear, qualitative data and has very clear operational use cases. Now, I want to talk about some of those use cases where, sort of in your perspective, in your line of work, when it comes to seeing things in practice, where is AI genuinely adding value? Where is it supporting those decisions and making a lot of sense and making a lot of people very happy? And where is it still mostly just noise and this?
Yeah, no. So I think probably the use case that I've found makes most people happy is when I generate images from my 5-year-old son of something like a dragon cooking pancakes. But I guess you're asking me more in a professional context. Right. I think ultimately it's the areas in which you can draw a line between, make a link, I should say, between the AI application and some measurable outcome, which, if you're really holding yourself to account in our context, the context of our discussion, then it's things like improved efficiency, improved performance, and more money, more profit, right? This is what you should be driving towards, or improve resilience or improve asset performance. And the areas that I think we've really seen the most tangible benefits here is in areas like energy forecasting, operational decision support, where you can use well-established data streams that have been around since before AI was mainstream, with established AI models that have been used for broadly applicable areas like weather forecasting. And you can integrate those into things like trading mechanisms. So a really good example that we use on a daily basis on the E side is around production aware energy management and battery storage. So by taking into account things like weather forecasting, right? It can be simple as how much wind is there going to be or how much sunshine in an area like Texas, which has highly deregulated energy markets. Then you can make pretty good predictions around how much generation you're going to get from wind and solar, how much consumption you're going to get from things like air conditioning. And that gives you pretty strong indicators of, along with other data streams and other AI models of price signals. And you can use that to do things like maybe even reduce production for a short time in order to reduce your Quinston peak, or discharge your battery system when energy is particularly expensive, or charge when it's cheap. And so here there's a really clear link between, you've got to get the algorithms right, obviously, and this is not an easy thing to do, and some players are better than others. But if you can get your algorithms right, the data streams are there, the systems are there to convert those data streams through the AI algorithms into money. So those things work really well. The areas where we see it struggling can be, first and foremost, when data maturity is a constraint, and secondly, where we see a disconnect between the actual deployment of the AI and the operational use case and the integration with workflows in the business. So in the trading example, if you're not able to then send a trading signal or a price signal from your optimization engine to your trading desk or to your automated trading system, then you're not able to make money with it. In this case, it works, but there are other examples where, if you're getting a data stream from your electrical power system assets, but the data stream is maybe incomplete, right? Maybe you only get it from certain companies' equipment. Maybe you only get it, I use a technical term, but just for illustration, from your low voltage, not your medium voltage, maybe only your transformer, not your switchgear. Then are you able to run that through your predictive maintenance algorithms and derive an insight? Maybe not. And then if you're not able to convert those measurements into insight that then informs things like your maintenance workflows and your asset management planning, then there's a breakdown between the AI use case, the AI systems and algorithms, and the money, right? At the end of the day, so that's where we see the challenges arise, and where we see the AI projects sort of fail to move forward.
Yeah, and you said something really interesting. There's obviously a lot of these data streams and data flows, including data that flows from the assets themselves, right? So in electrification, you'll have data from your switchgear, from your transformers, protection systems. There's a lot of data available. And if it's not innately available in the machine itself, you can always use sensoring to capture some of that data. But how do we actually capitalize on those data streams? And what I mean by that is there's different versions of the truth out there. And it's going back to this siloed approach, right? Who are we believing? Who are we following? Whose advice are we taking when it comes to interpreting the data in the right way? And what is the ideal approach look like to get to that one single source of truth, according to you?
Yeah, I'm not sure that it's we figured out in all use cases, because things can get quite messy and quite complicated.
Right.
I think we've seen a couple of approaches gain traction. One is throwing data science resources at challenging high frequency data problems. We've seen in areas like predictive maintenance, and really been successful in, just through volume of data, through applying traditional data science techniques, obviously AI and machine learning, in a very application agnostic way. But what we also strongly believe in on the ABB side is that you'll need a combination of sort of deep physical phenomena and asset know-how, combined with best-in-class data science techniques, to actually make the most of understanding and internalizing your data and then driving decisions from it. Because it's a combination of factors, and especially in our space, where you can have, again, these assets that were designed and commissioned in the 1960s, right, but are still running today, and under ideal operating conditions might still continue to have another 10, 20, or 30 years of life.
Right.
And the other example is you can have a substation that's got the same equipment in it, but in one example, it's out in the desert in Saudi Arabia being bombarded with sand and wind, and in another example, it might be relatively benign conditions in the London Underground, right?
Right.
And then so it's one thing to have the intrinsic asset factors and asset metrics, but you also need to have an understanding of how what the context is around this. So paying attention to the physical phenomena of the asset, the coils and the springs and constituent parts of the circuit breakers, as well as the contextual information, as well as data science. All these areas are coming together for us now, looking at both physical models in the traditional sense as well as machine learning, and ultimately, however you do it, being laser focused on the value delivery and the use case, right? Because in some cases, frankly speaking, for the small fuse boxes or miniature circuit breakers you have in an apartment, you'd be better off recycling those and replacing them, right, as opposed to onboarding a dedicated asset management system.
Right.
And so being mindful of where the value is and under which asset applications you can gain most from those sensing technologies in the first place.
Yeah, and there's value in more places than one, obviously. I mean, one thing that you mentioned in the report as well is that it's exactly this alignment between you look at the data, you look at the metrics, you approach the strategy behind it, but you also look at the governance and how you treat some of those assets. And that is what is going to ensure that, on the one hand, sustainability and performance are not mutually exclusive, right? They're not competing goals in a sense, but they can work together and they can actually sort of strengthen and reinforce one another. And I want to ask about this because, we discussed that there's this tendency and propensity for the industry to move towards more AI-driven, more sort of data-driven insights and actions. But what is it that leaders risk when they emphasize one over the other, right? If they only focus on sustainability, if they only focus on performance, it naturally needs to be a balance. But what is it that's going to happen if they look at one or the other and not approach both as being part of the same thing?
Yeah, and I think it's a really interesting point, right? And I think it relates back to the discussion we were having before around that like asset system mindset and breaking down silos across the organization. Because you look at, again, I hate to mention it again, but the conflict in the Middle East, right? So
Right.
if you are taking a unilateral focus on your on asset performance, right, without considering the energy cost implications to a certain degree, then you could be really exposed to these sorts of price volatility and price spikes. And so that's the risk that you expose yourself to, is if you separate these sort of cohabiting criteria, reliability, cost, operational resilience, carbon content, so on, then you can end up optimizing in the wrong direction as conditions can change. And so in our view, based off what we learned out from in the business and of course validated in the report, is that you kind of have to ensure that you have these governance frameworks, you have these metrics, you have these models and strategies across functions, and that you can drive that collaboration within the business aligned with those long-term goals in your strategy and those metrics that you want to measure and optimize. And what you often find is that sometimes there aren't trade-offs, right? So a good example at the moment is in a world that you're confronted with high gas prices back in the UK, for example, where due to the marginal cost models, gas is often the price setter in the electricity market. If you have taken an approach of deploying maybe some solar, maybe some wind, maybe a battery in your industrial facility or your data center, then you can somewhat insulate yourself from these price shocks. But what you can also do is you can also optimize those assets more towards reducing carbon content. So you can be both sustainable and reduce costs at the same time. And what's more, during a period where resilience is particularly critical, or energy is cheap or low carbon, then you can provide yourself with a bit more resilience, because you can just use that battery to look after your data center, to improve power quality and to mitigate a blackout risk, right? If there's an event on the grid. And so there are absolutely investments that you can make that cover the reliability, cost, and sustainability benefits in one hit. And having the full visibility on these and extracting the benefits that arises when you are able to develop that framework that covers all the factors simultaneously, bring those teams together in a cross-functional environment, and really sort of embed those metrics as business critical in such a way that you can identify and implement your asset management strategy.
Yeah, so it's getting to be a business imperative almost to not look at them just on their own individually, but to see them side by side and make sure that the larger business objectives, the larger containing strategy is also aligned to foster that alignment in the individual departments, the teams, the units, the sites, etc. It's a really interesting take. So final question that I have for you, Matt. This podcast of mine is hosted on a platform that's called Future of Assets. It is definitely future forward looking. If I were to ask you to focus on the next year and a half, 12 to 18 months, what do you think is going to shape in your business, in electrification, that particular future most prominently?
Yeah, I think it's really this this mindset shift of your electrical power system, your asset systems more broadly, becoming something more strategic than just like a passive carrier of electrical current. And in today's world, which is characterized by a lot of sort of geopolitical and market instability, having a level of flexibility and resilience at the system level is going to be more and more important moving forward. So taking that full performance mindset approach, right? To cost, sustainability, resilience, continuity, ensuring that you're able to bring different stakeholders together to drive towards those holistic outcomes, right. And providing yourself with the KPIs to do it, linking those unambiguously to business KPIs, whether those are financial or non-financial. And I think hand in hand with that is this evolution of outcome-based and performance-based criteria when you're thinking about both the performance of your assets and also how you interact with them in terms of these service contracts, discussing before, and as a service models. And I think in a nutshell, for me, it's like in a world that is increasingly unpredictable, whether it's geopolitics, whether it's energy transition, whether it's the reliability of the power grids, whether it's the spikes in consumption on the load side, not about just how well your assets perform under conditions that you can predict, but how well they can perform in conditions that are unpredictable. And I think the organizations that do that best are the ones that are going to have the best asset management performance.
Those are excellent words of advice. Thank you so much for your words of wisdom, sharing your insights with us, Matt. Let me tell you, it's been a couple of weeks in the making, but it was well worth the wait. Thank you for being on the podcast. This has been another episode of Assets Unscripted. These episodes are published on our website, futureofassets.com. Future of Assets is published in partnership with both IFS and Ultimo. Thank you for listening, and we look forward to welcoming you to the next episode of Assets Unscripted.